Welcome to Nexgen Software Services. In this video, we will take you through learning the basics of the indicators and how to apply two high-probability trades. First, you will want to start by studying the educational material in step number 1 and step number 2 from the website. Step number 1 will teach you the indicator configurations needed to do a high-probability trend trade. Step number 2 will teach you the indicator configurations needed to execute a high-volume area trade. Once you understand these two key indicator configurations, accurate Fibonacci support and resistance, trigger line, and market flow application, you will be able to masterfully trade any market with confidence. Perhaps the most important concepts you will need to master are if the market should continue its current trend direction, or if the current indicator configuration shows a high probability of terminating the trend. The termination section before step number 2 will reinforce the looks that will end the trend. Reading your trigger lines is especially important when taking trend trades only when the market trend should continue. It would be best to stop taking trend trades when and where the market has a high probability of trend termination. The termination section will also build the foundation for the second trade, the high volume line trade. When you learn the rules to the HVA trade, rule number 1 states that the market must terminate the trend at a critical Fibonacci area before taking an HVA trade in the opposite direction. Step number 4 will teach you how to accurately interpret the T3 market flow indicator. Its purpose is to give you an understanding of the relationship between buyers and sellers' sentiment at the time of entries and to pinpoint entry levels using volume analysis. Please watch the market flow video to understand the exact entry patterns generated by the market flow key Fibonacci and trigger line trading areas. For the rest of this video, we will reinforce the lessons taught in steps number 1, step number 2, and step number 4. When this video concludes, you will have a very high-level working knowledge that will put you on the path to success.
Alright, for the remainder of this video, we're going to have me narrate. First, we're going to have a 21-3 chart on the left, we're going to have a 13-2 chart in the middle, and we're going to have our 8-range market flow chart on the right. And before we get started, I want to lay quick ground rules on what trade setups will look like for us. From step number 1 in the educational material, we're going to use this look on the 13-2 chart triggers being wide and strong in one direction. And since we're going to exclude the 5-1 chart from this video, we're going to only look at the large trigger lines and small trigger lines on our market flow chart to define our trend trades. Specifically, we're going to watch large trigger lines in areas coming together for trend trades in any direction. So what we're going to do now is we're going to watch the market. First, starting on the left, you can see we're at Fibonacci resistance on our 21 chart. And you can see we're at Fibonacci resistance on our 13-2 chart. And whenever we're at Fibonacci resistance, this is going to exclude us from taking any type of long trades. So the only type of trade we can do at Fibonacci resistance is either a short trade or a high volume area trade. In this case, we don't have a high volume line to trade from, so there won't be a trade. And what we're going to do is we're just going to walk through an entire day of the market. And we're going to watch the charts and we're going to work through understanding of each of the indicators and give you a very thorough lesson in Fibonacci and trigger line reading. So you can see as the market is pushing to the downside here, obviously there's not any trades yet. This is kind of the beginning of the day. I do want you to notice right here, we've gotten back to the large triggers that are crossed up on our range chart. If our large triggers were going up on our 13-2 chart, that would be the look on the 8-range chart that would generate a trend trade for us to the upside. So since we don't actually have the triggers going up, it can't be a trend trade. We do have a green high volume line here. And again, it's very important to notice that we're going to be doing trades mostly 99% based on our 13-2 chart as well as our 8 range chart. So I really want you to hyper focus on the 13-2 chart and the 8 range chart. Those are the trades or the areas and the indicators that we'll be using to actually generate trades. The 21-3 chart will only be there for termination conditions and or tops and bottoms. So as long as we're at key Fibonacci resistance with strong triggers on the 21-3 chart, we can do something. If you notice the weak triggers on the 1-to-1 on the 21-3 chart, probability is that we'll be headed up here from our high volume line. So the question is, how high will it go? And anytime you take trades from a high volume line with the triggers rolling up on the market flow chart, you always have to be aware of what's ahead of you. So in this case, if you had bought the high volume line in the market flow, this high volume line at 88.50 might be your first target, and then the 1-to-1 higher up on the 13-2 chart will end up being your second target as long as none of the indicators change. It's very important whenever you're making a termination condition at the bottom, such as 1-to-1s or divergence at the bottom or large trigger lines rolling on your 13-2 chart, to watch out for that high volume line and triggers. When you have your large triggers rolling up as we do here, that's a very, very powerful look for us on the 8 range chart. The only other time you're going to do a trade whenever the large triggers on the 8 range chart are not crossed in your favor is when you make a very definitive top or bottom. And when you make a definitive top or bottom, you'll be able to then use the small triggers rolling with a high volume area. So as we look at our chart here, you can see we've got very wide triggers going up on both the 13-2 and the 8 range chart. So we should continue up. Now we did run into some Fibonacci resistance. Again, we're going to really keep our focus on the 13-2 and the 8 range triggers to tell us whether the market's going to keep going in an upward direction or not. Obviously, we've got some resistance that we're running into, and it's still very early morning. As we work our way through this day and just narrate it, and my hope is that just narrating through the entire day will give you the educational foundation on reading the indicators that you're going to need in order to be successful trading our software. I'm not as worried about you knowing the rules for a trade right off the bat. The rules for a trade will become visually obvious when you read the indicators properly. So as long as, make sure there's no drawing objects on there, as long as the trigger lines on the 8 range chart continue in an upward direction, we're going to keep trading long or stay long until we run into some type of termination area. Obviously, we're pretty close to that now. You can see resistance and mid bands obviously is putting up a fight here. So again, as we narrate through a market, and we do this in the live class during the day, and more importantly, there goes our small triggers rolling over on the 8 range chart. You see that? Again, that's not going to terminate the trend, only really when the 8 range small triggers start to get below our large triggers on the market flow chart. Well, we really think that the trend is over. Now, had you have bought 43, 84, 50 down there at the high volume area and the fibs and the triggers. You can see clearly that there was, close to 8 points before you had to make any decisions. And again, the purpose of this educational video is not to try to teach you the rules. The rules will become obvious now. You can see we've made a top, and now you see this right here. We've got a high volume line at 43.90. Now the question is, do we want to go short when our large triggers are still up on the 13.2 chart? Again, this is where people get tempted to go short, but don't do it yet. When the triggers are strong to the upside, you're probably going to get run over most of the time until it gets to a more definitive area or the triggers start to roll over again. So you can see now we've got triggers rolling to the downside. And this is where the white paint bar usually will be the spot where you can start going short. So you see how the white paint bar to the downside, when the triggers are rolling to the downside, that's usually what starts us to the downward direction, which clearly happened very quickly. Okay, so now that everything has rolled over, we want to do trend trade shorts. So if you got that first short, that was great. Otherwise, everything else that we're going to be doing from, the large triggers on the 8 range chart. Remember what we said? Price has to get up to those large triggers on the 8 range chart for what we're going to be doing in this video for trend trades. So specifically, let me point right here, and you can see our large triggers are coming down. And again, if you have a 5-1 chart, that's the type of look that would generate a 5-1 trend trade. As we continue down, you can see clearly that the high volume line at 84 and the Fibonacci at 84.50 will be our next area on the market flow for downward action. So that's where most of our traders will put a limit order in. I do want to give you an idea about the S&P. Think 3-point stop. So if you went short at 84, your stop will be at 87. And it's generally best not to mess around with your stops until you start making new down white paint bars in this case, or take out the last low. As long as the 8 range triggers remain very strong, which you can see in this case, we have 13.2 strong, 8 range strong. Stop staring at your 21.3 chart. It doesn't matter for trend trades. Again, this is a very, 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 very important concept. Do not stare at the 21.3 chart when you're doing trend trades with the 13.2 and the 8 range triggers in your favor. Now, how far will it go? Again, the next Fibonacci area is always a very good target. Now you can see we reached it, and that's fibs on every chart, so that's a really nice opportunity. Now we have to ask ourselves a question. More trend trades, right? We just touched our large triggers. We have a market flow sell signal. No reason to believe that the market is going up based on these trigger lines. I know we're at a fib, so you're going to have to protect yourself. And again, traditionally, when you're at a fib, after the white paint bar down, you can get your stops down to break even. In this case, you would be out of your position. And now we have a high volume line. So you can see the green high volume line there. That's the area where, assuming that all of this beautiful Fibonacci support holds, we're going to see, if we see our triggers roll up to it, we're going to see more upside action. And again, that was just a little overrun of a Fibonacci area, which they can and will do. Now, as we get back to our fibs and our high volume line, there's your trade long. Everybody see that? Very easy, very simple. Trigger lines were up, green high volume line to the long side. Very quickly made it up to the first target area, which is the mid band on the 13-2 chart and the high volume line from the market flow chart. And again, we're going to continue with trend trades. Again, noticing large triggers going up as our trend trade area on both the 13-2 and the 8 range chart. And then triggers are still up. So we're still continuing to the upside, but we have to be a little bit more cautious now that we hit our mid-band. Always our first target area. If you watch the 13-2 chart, here I'll slide this over a little bit so you can see the market flow a little better. You can see now the 8 range chart does no longer supports long trades. In fact, you'll notice that all of our trigger lines are rolling down, and that's not going to be as advantageous for going long. It's probably indicating that we're going to be going short. Now we need to get through a support area here if we're actually going to have any type of short trades. If not, support will hold again, and then we'll see what happens. But again, looking at your market flow triggers here. Down, 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 down. Notice that the triggers are breaking through on the 21-3 chart. There's your high volume line right there at 75.50. Should be going down. And again, you know, if you want to wait for the fibs to break and turn red, that's the ideal scenario for us before going short. If they don't, support holds and we get high volume lines, and then now we're looking to go back to the upside. And again, you can see how the thought was down until the trigger lines roll back up on the market flow chart. Once they roll back up, the market goes back up. Now, we never did break Fibonacci resistance or support and turn into resistance. So that's a termination condition for us. And you can see right there's our high volume line, should take us back up now. And there's our white paint bar up, so you can get to break even. Notice how the high volume line was exactly in between those large triggers. Super favorable for what we're doing. Now, for continuation to the upside, we're going to have to break that pesky mid-band on the 13-2 chart, right? That's always a good first target for any long trades. Again, pretty easy 4 points. The only question is it going to continue to the upside now, or are we going to end up breaking support? Now, we've had a pretty downtrending day. Now we've broken our support areas on our smaller charts. You see that? See how we got white paint bars and sell signals below support? That's the look, and there's a red fib. So now we can go short for real. See that? Red fib, down triggers. Like to touch those large triggers, but 75 is pretty much close enough for what we do. And again, it's very important. Both sets of triggers on the 13-2 and the 8 range chart are down. 100%, without a doubt, everything says down. Now keep in mind, 3-point risk basically is what you want with the S&P. As we start making new down bars, you're going to reduce that risk. Amber alert. Sorry about that. Now, nothing has changed, right? We still have red fibs. We still have triggers. Sometimes you have to take a trade twice if you get bumped out. Notice that the yellow market flow signal says down. And again, all three charts say down. This is as easy of a down look as you're ever going to get. When all three of these charts say down, down is the way to go. Obviously, you can take some profit along the way. And then ultimately, we'd like to see the next Fibonacci support area for a target, and then we have to evaluate our trigger lines. And you can see we've reached our fib support. So between resistance at 75 and support at 68.50, another 6.5 easy points, and the triggers are very strong, so it looks like we're going to be continuing. Notice breaking fibs. Again, reaching the second fib, kind of the edge of fibs now. And anytime we reach the edge of fibs, we have to continually read our trigger lines. And you see we have one more test of that high volume line at 70. That will be the last short. And if that fails, then that will be the end of our trend, usually. And you can see pretty easily coming off of that support at the bottom that we get a bounce off of the high volume area, and still haven't really rolled anything to the upside, have we? None of our trigger lines on our market flow chart have rolled over yet. You can see they're starting to. The small triggers are starting to, but again, for a really good high volume line trade, we like to see the small triggers at least roll. Now they're starting to roll. See that? So after support holds and the small triggers roll and we have market flow antenna bars to the upside, we should bounce up to resistance. Now the problem is, again, a sustained downtrend. And notice this is the time you use your 21.3 chart. Add a mid-banded fib on your 13.2 and strong triggers on your 21.3. So this is where our market flow yellow paint bars from the edge and a white paint bar following, that's your short. If you do edge trades, that's your short. And again, it's very, very specific. You have to have a very strong look on your 21.3 chart to the downside. And you have to have strong triggers on your 21.3 chart to the downside. And again, this is your target area if you were short, and it's also your long area. You have up triggers on your 8 range chart. You have a high volume line. You have Fibonacci support. And again, at least an exit there is the most appropriate use. We're going to have to watch this area to break, and again, our market flow triggers will determine what happens next. Market flow triggers are down. The trend should continue to the downside. Again, we're not at a spot to take trend trades, not at support, right? The only thing that can happen at support generally is the market will go up, or we have to break it. Right? With the triggers going down on the 8 range chart, we're not going long. Some people will take a short into support when the triggers are strong, but usually it's better to wait until support breaks. Looking at your market flow chart only, we're going down. I want you to really key in on that market flow chart. It will really guide you as to the direction of the market 99% of the time. And you can see now we're breaking supports. We have strong triggers, right? Trend trade thoughts would continue. And again, this is one of those situations right there. See how we hit the large triggers? 43.66 trend trade short. Not only did we have a high volume area there, but we had our large wide triggers, and all of our other charts are to the downside. And again, this is a very traditional trend trade look on our 8 range chart. The width of the triggers on the 8 range chart are going to clearly give you the direction and the areas. The areas are the same on all the charts because we superimpose the fibs across each other. And again, it's down, 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 and we start searching for, the first target, which might be close to the last low. And then we think about, the next Fibonacci areas, which you can't see here. We'll just have to watch the market as we get there. So there was the prior low, which is never a bad target number one. Reading your trigger lines on the market flow chart say what? Down. And if they stay down, the market usually goes down. And again, if you got out of a trade, obviously you'd be looking for another one. I have to say it's easier to stay in a strong trending trade than it is to look for another trade. So, one of the rules for you guys in your trading plan and the things that we teach you are, if you're in a trade, a trend trade, like the one from 65.50, stay in it until your conditions change, which if you watch the small triggers on the market flow chart, it'll almost tell you every single time when it's time to bail out of a trade. Now, obviously, that was a pretty easy 10-point run to the downside. The triggers are strong enough. We should get one more push. Notice the 1-to-1s on the 13.2 chart. They kind of bounced for support. Now they should act as resistance. Again, noticing that we got very close to support. We'd really like to get to support. Also noticing that the market flow at the bottom had a yellow white paint bar. That's the precursor towards bouncing up higher and needing a market flow signal before going short again. And if you notice, where did the market flow give a short signal? All the way back up at 36.65. Now, if you take edge trades, that's the type of trade that you'd be looking for. If you're not an edge trader, then just don't worry about that trade, right? What you'd be looking for is more continuation to the downside. But you'll see if we can't take out that 65 area, that resistance may potentially hold and push us down. We'll see. And again, hopefully, I know we're kind of going through this quick, but anytime you hit fibs and the triggers are not getting above it, we're not going to think about doing any type of long trade. So for the moment, Fibonacci resistance tells us we're not going to do any long trades, even though the small triggers are going up on the market flow chart. We have to wait until everything agrees at the same spot at the same time. So for the moment, we're at some resistance, but we don't have anything to do. Now, if we can get, now that we've hit the mid band and we've kind of stopped out the last high, that's a termination spot for us in an overall downtrend. Taking out the prior high. This is where watching the market flow, and see that high volume line right there? See how we start to build a story about resistance. The white paint bar down tells us that the top might be good. The high volume line, again, while there's no triggers going down, so we're not going to sell it, we can still watch that type of area. More assertive traders try to do counter trend trades. We're not going to focus on that in this lesson. The only lesson at the moment is that Fibonacci resistance may hold. That's all we need to know at the moment. More assertive traders might try a short trade at 65. Again, it's not a conservative look, but you can see that the temptation is there. You'll see some of our traders in the chat room be a little bit more assertive at the edges with the high volume lines, even when the triggers aren't rolling. So anyway, that's not the more assertive trade, but that's an example of what a high volume trade would look like if the triggers were a little more favorable. Generally, those that do the more assertive trade will also exit at a high volume area of support at the bottom. So you can see how he hit 43.59. Usually a really good target, especially when the large trigger lines are going up on the 8 range chart, which we all know what that means, right? It means that there's a really good chance that we're going back up again. And this is where we may test the triggers and or the high volume line, and then we may get something a little more useful out of that resistance area. So right now we're kind of stuck. The triggers on the 13.2 are up. The triggers on the 8 range chart are up. So technically the direction is up. The area is down, and now you can see we got right below the market flow line with our small triggers down. That's a more advantageous look for a top. So if we get a market flow down bar here, we'll probably see some continuation to the downside. See how we retested that high volume line and resistance after the triggers rolled over? That's a more appropriate use of the high volume line for a short trade. Again, that took a little while. Obviously, there was 2 attempts at the high volume line. The first one was assertive against the triggers, and the second one was with the triggers, which is what you're looking for as a new user. And now all of our trigger lines are down, so we're back into trend trade mode unless we hit support, which we did. Now, if you were short from the high volume line, this is your target. So from 64.50 all the way down to 56, again another 8 points, and as fibs break, now we can sell. Look at the high volume dots breaking through resistance. You see that? A lot of sellers when we broke resistance, which is good for us. Now we can do a trend trade. If we get one, right? All of our triggers are down. Large triggers is the visual clue for us on the 8 range chart. So fibs, triggers, 55-ish, right? Right about there. And now that's your trend trade short. And remember, think 3 points of risk. And now that you have a white paint bar down, don't think 3 points of risk. You'll pull your stop down. You don't really want to get stopped out of this when it's this perfect. But that's a really good example of a very wide triggers on every chart, and even if they take out the high by 2 or 3 ticks and go back down again, as long as our small triggers on the 8 range chart don't roll up and give us bullish bars, we should still continue to the downside. So now we're testing the small triggers on the 8 range chart. We should get through. And patiently waiting for the market to tell us what to do. Anytime you get back to a prior low, that's a good profit target number 1, right? And now you'd be at least 4 points profit, if not more coming. Look at all your triggers. Every one of them is down. And again, the reason I'm not using a 5-1 chart here is because when you read your 13-2 and your 8 range chart properly, if you have a trade on your 5-1 chart, take it. There's your fib, so that's your target. 55 down to 39, 6 points. And clearly not one trigger line broke fib, so that's a low. Stop. Termination condition right there. We may still go down because the large chart's really strong, or the 13-2 chart's strong. But it's going to be difficult to take any more trades short. Does that make sense? And we're not going long when the triggers are really strong on the 13-2 chart. It's probably going down. And if we break support, then we'll sell again. Again, I can't stress enough, the strength of the triggers on the 13-2 chart would keep you from taking any long trades. And now we're breaking support, so you know what happens when we break support, right? We go to the next support. Most of the time. Unless the triggers give out, then we usually make it to the next support. Hopefully, you can see that the use of your 5-1 chart isn't necessary to read where the market's going to go and what it's going to do. The only thing you really use your 5-1 chart for is helping to kind of pinpoint an entry when the 13-2 and the 8 range chart say so. So I'm very specifically leaving the 5-1 chart out because you can see it doesn't matter. The 13-2 and the 8 range chart drive the market, tell us exactly when and where and why it's going to go where it's going to go. We don't have to guess. We just have to listen and read the triggers. And again, I think the more you get used to reading the 13-2 and 8 range triggers. Look at that. We broke fibs. The triggers are down, more down. That's a hard trade to take because you're like, I can't believe it's going to keep going, but it will. Until it doesn't, right? So right there at 43, that's basically it. We either need a down bar or another up bar and we'll be done. Right? This is do or die time. So stop above that signal, and that's it. If they get it, then we'll be done. They didn't, so trigger say down. Gotta believe down. We got to the prior low. So again, you have to kind of, there's your bar. See how your small triggers rolled over with that bar up? That should be the low. That's that last overrun of a fib, and then they go back up. They do that a lot. Don't they? And again, you have to take that last short, but again, you have to be cautious at the prior low. Probably a couple divergences on your 5-1 chart there, but all right. Can we sell the edge? Are your 21-3 triggers strong or are they weak? If you did sell the edge, you have to be cautious that it may not go all the way. Right? Whenever your triggers go up very strong and you have divergence on the lows, usually edge trade shorts are short-lived. If you did it from the yellow paint bar, that's fine. Preferably for trend traders, you can see your next trade, can't you? At 43.50, 43.50, right about there. Trend trade long. You see it on those large triggers, right? So just think 3-point stop until it takes off, and then you can reduce your risk. And again, I think having the 8 range chart here makes the visual of that trend trade really easy. See how easy that was? 43.50, you're up 5 points. And probably going to get a bunch more. That's easy, right? It's always easy after 25 years. You'll get this. It's not very difficult. Now, this is where we go back in time and say, see the 13-2 triggers, how strong up they are. See the 8 range chart, how strong it is. And if you took that long trade, you know, with strength of the triggers, you probably took 5 points on your first one, and this is your target on the second one. It's literally a 12+ point trade. It doesn't take many of those to make a great day. Now, triggers on the 8 range chart. What do they say? Up, 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 up. Don't think anything but up when they say up. And yes, we broke out of a fib, and the market flow agreed with the breakout. And what does that mean for you? High volume area, trend trades, right? So as we pull back into the high volume area and trend trade area, looking at the triggers, you're going to get another long trade, right? And again, you know, you have to put this in there. 3-point risk, they almost got you. And there they got you. That's the fake out breakout. And if you went long, it's okay if you lost. That's the right thing to do. You'll have more trades. Now you can see, you know, they faked us out. And what does that mean now? 8 range chart, 13-2 chart only. What does it say? Up or down? Down and down only. Where's our trend trade going to be? Never. Okay. All right. Well, now where's your trend trade going to be? It's the same thing. We still need to pull back maybe to 51, 43.51. It may be lower if the triggers come down. And again, you just have to kind of wait for everything to come back together. And it will. All right. There you go. There's 43.51. We'll see if we can get anything to the downside here. A market flow signal. Now, if you get a market flow signal to the downside, keep in mind a few ticks above it is probably it. So they tricked us a couple times there. Again, those are the ones that are a little bit more difficult. You know, again, live it looks really good, and then if you lose it, it goes very quickly. And it's going to happen. You will get a perfect look, and you'll get run over a couple times. I'm glad that happened. I'm not glad it happened, but it does happen. I'm glad we were able to look at the perfect look and see the market flow signal and see that signal get taken out and what happens next. And again, traditionally, once you get a market flow signal at a trend trade, you know, we always reduce the risk behind the pivot usually. So, you know, you might have lost 2 points on that S&P. After that 12-point winner, it's okay to lose 2. All right. Now things are clear, right? Up, 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 up. And again, you have to, let's see, they hit resistance. So we should bounce back to our triggers and support, right? That's what we think, usually. And again, hopefully the direction and the areas are very clear to you. We hit resistance, so the thought process is we're going to get back to our large triggers on the market flow chart, and when we do, we could potentially get a trend trade long. And again, this is where so here's your fibs and your triggers. We should bounce right there, right? And again, whenever you're going to think about trading an area, look at your high volume area above us. See it right there? That usually becomes the first trouble spot for a long trade from the edge. So, you know, the 43.62 right there is usually a good target. And if they're going to end up putting in divergence or retesting the low, it usually happens right there. It's very common. So if you were long, you'd be tight on your stop right now. And again, I want you now to look at your 21-3 chart. I know we don't talk about it much, but that's the look that if you get a pivot stop out on your 13-2 chart or get to the fibs on your 13-2 chart, we expect it to hold. So, you know, if we retest support and get to the edge of support like 43.55, that's the type of place where we'll generally see a long trade. And again, you can't do any trend trades. So we're not really looking at the market flow chart at the moment. What we're looking for is, if it even comes down, you can see we just retested the last high volume line. So again, that's failure, and now we'll get down and retest usually support on the 21-3 chart. So there, that's the spot. Now if market flow signal, that's your edge trade long right there. See that antenna bar? Give you a minute to think about it. And again, you know, your target is actually 43.65 or better. Whatever the next fib is on the 21-3 chart generally is your target. And again, this is your first trouble spot on your 8-range chart. But you know, this is where we go back after the fact and you can say, see how strong the 21-3 chart triggers are, and notice that how far away our large triggers were on the 13-2 chart. And that's the type of edge trade that ends up making 10 or 15 points usually. Now we'll have to, again, if we can't get through here, now see our market flow small triggers are coming up to save us with a signal, no less. Now we can finish the move off usually. And again, if you were going for 10 points or better, there's the next fib on the 21-3 chart. That's the target. 12 points right there. So that's usually it right there. Triggers are still strong, so we might keep going up a little bit. But anyway, this trade looks very easy after it happens. While you're in the moment, you have to really recognize anytime you're at a mid-band and fib on the 13-2 chart, those are the edge trades that we talk about. And you may or may not be ready for edge trades yet. You may think more continuation trades or trend trades on your 5-1 after the edge holds. But I wanted you to see the relationship of the market flow at the edge. And look at our market flow triggers right now. They're so strong. That's not surprising. Next fib. Alright, yellow paint bar from the fib. Still strong. Now, in order to do any more long trades, what do we need? We don't want the edge of fibs to hold. Right? I mean, maybe we get one more bounce right here, but really it's usually time to stop taking long trades. And now it's time to go short. The edge with divergence on the 13.2, and we need a pullback, so we're selling 67.50 if we get it. 68. Oh, come on. You see what I'm talking about? High volume line and fib up there. Limit order right below it. And now our large triggers are crossed over on the market flow chart, even better. And that's your short. And now it's trend trade short time, isn't it? So that was a perfect high volume area trade after a termination. There's your trend trade short right there. Pull back to a high volume line and triggers, and it went a little farther than it should have. Might have to do that one twice with the market flow signal if you got in assertively. That was really close. You might have got bumped out. Anyway, very easy to see, right? 13.2, 8 range triggers were down. It was nothing but sell signals. And now another trend trade. If we get one. They're overrunning a little bit. Back to the high volume line. I wonder what happens from the high volume line. All the way up. Triggers are up, so we're not going. That's resistance, but the triggers are up, so now they're down. High volume short right there. See how the triggers are rolling down? That's your high volume area short. 62.25 area, give or take. They're being mean. They do this sometimes. Alright. I've gotten a little bit choppy. So now some say up and some say down, but resistance is still holding, so it's termination at the top. Another high volume short. They're making it difficult. Trend trades were a little tough, and the high volume area trades are a little bit easier. And again, to the large triggers, wide down, same thing, even though we lost one or got run over and had to do it twice. Consistency in the rules and the looks is very, very, very important. And now everything is strong down again. Should at least get to support, right? They chewed that area up a little bit, but high volume areas and trend trades, both of those gave quite a few opportunities. Even if you get overrun a little bit and you have to do a trade twice. Alright, now we have trend trade looks, right? Looking at our triggers, but we have fibs. What do the triggers say? Down. Always ask that question to yourself. What do the triggers say? Up or down? It keep you out of trouble almost every time. Alright, now we still have blue support here, so it's really got to either get through or that's going to be the end of it. It's close. That's probably the end of it right there. See how the small triggers rolled up on the market flow chart? That always signals the bottom. That's it. So if you were short from 56, you had a few points in it. Obviously plenty of room to manage your position with your 5-1 chart. Again, we don't have the 5-1 chart on here today because we're just going through the direction and areas. So now you can see the fibs have held and the triggers have rolled on your 13.2 and your 8 range chart, which means what? Trend trade longs, right? If you get them, back to the large triggers on the 8 range chart and the fib, and do or die time. High volume line and fibs right here. And 55 long-ish. Now I'd have a stop at 54 after that stranded buyers, because if it takes that out, we don't really want to mess around with it too much. Oh, they're being mean today. I'd have to do they're chewing up the support, but you can see our triggers have rolled over strongly on our market flow chart, which is not really as good for longs. The support held eventually, and one more attempt at long with our small triggers rolling up in a high volume area. Obviously you have to get going, or you can see the battle here. One trigger's up, one's down, right? It's a mess. 54.50 will determine what happens next. Looks like we're going to break it. Alright, now everything's down. Again, a lot of people do a trade or two in there and then it just doesn't go. And again, retrospectively, you can see what we were battling, right? The large triggers going down. So now we get a trend trade short at 54.50. After all that mess, they're going to apologize to us, hopefully. Again, I know this is high speed, narrating through a replay for a day. I know it's only 10 o'clock on the clock, but this is not taking as long. So we get an apology from the 54.50 area down to support, but our triggers are strong. Again, there's a chance that support breaks when the triggers are that strong. Never a bad spot to take a profit, right? But if you read the triggers, there's little chance of this support holding at the moment. So for support to hold, we'd have to see our trigger lines roll up. And again, they're kind of chewing the area up a little bit, but the triggers give us the truth. That it has to be down or nothing at the moment. Hopefully this has been educational. I mean, we still have a long way to go. We're going to keep going. But again, you'll see the same thing over and over and over. And again, the market now, you can see spiked up a little bit higher, and we have a termination condition on our 21-3 chart and our small chart. And sorry, it's taken me a second to say it all, but you can see our high volume line and our small triggers rolling up at 47. That's the anatomy of a bottom, where you get a termination condition on a chart and then the small triggers roll up. Obviously, we're knee deep back into support, and the 54 area should hold for us. We're not going short with our triggers going up, right? We know that, right? Even though the area might hold, we're not going to go short until some trigger line rolls over. So we either have to break above 57, which may or may not happen, or we have to roll a trigger. There's a trigger rolling on our market flow chart. See that? Again, we're kind of stuck in between support and resistance. Again, leaning in the direction of resistance, and we're waiting for the trigger lines to resolve themselves. We have one up and one down, which is not the best on the market flow for going short or long yet. Alright, now we cleared out. Everything is long again, right? Again, trend trades is what we'll be watching for as we pull back inside of our large triggers. Do or die right here for going up. Again, they have a tendency sometimes to chew these areas up a little bit, and it's, you know, again, that's probably it right there. So, again, looking at your 21-3 chart, you can see they probably weren't breaking out too easily. If you took a trend trade long, which would be okay, you just have to have proper management on those breakout attempts. Alright, we now have termination conditions on our 13-2 chart at the bottom, but our trigger lines are very, very strong on our market flow chart. So we're not going up yet. Termination condition or not, it doesn't matter until some trigger lines roll over, or we break through the fibs. Either or. Does that make sense? When you look at the market flow chart, the trigger lines say down, down, and nothing but down for the moment. What we're waiting for is small triggers to roll up in a high volume area, if we get one, after a pivot stop out. Or we're waiting for fibs to break at 38.50. Alright. We're back to the large triggers again on our market flow chart. See how they crossed up? Usually that's a pretty good indication that the termination condition will hold on the 13-2 chart now. Again, we're really stuck in between areas here, so it makes it a little bit more difficult. Again, favoring the termination at the bottom for the moment because the trigger lines were going up. Obviously recognizing we have a lot of resistance above us up here. So we're in a choppy market for the moment. And choppy with a downside lean from 5 resistances at the top. If we can make a clean break here, we'll see continuation to the downside. Maybe. All right, so again, we don't worry about anything except trigger line direction at the moment. You know, was there a trade in there to go short? That was a tough one. It didn't quite pull back into what we were looking for. So, short version is no. But the trigger line direction is clearly down. But we hit support, so we're waiting for a roll up and a high volume line like that one. And now we'll have the potential to go up again. So they went down and tested a lower support. Now every trigger line is strong on all the 13.2 and the range chart, right? That's all you need for a trend trade long. Hopefully seeing the bottom, seeing the divergence at the bottom, and seeing the trigger lines roll makes it easier. Now we need to touch the large triggers on the 8 range chart, and that'll determine what happens next. So there it is at 49. So this should determine what happens next at this area. See the wide 8 range triggers right there? Clearly said more to the upside. And if you did go long, obviously this is first target area at 56, 57.50. That's a termination spot. So that'd be the end of your long trade. Now we have a good termination on our 13.2 chart. Now we need a high volume area sell. Or a trend trade short. See the high volume area at 56? Not sure if we make it back up that high or not. $43.56 should be our line in the sand. Right there, one way or the other. If it breaks, it keeps going up. If it holds, that'll be the top. If you did go short at 56, see the green high volume line right here at 51.75? A good first target, which is what we have in our step number 2 literature. The second target is always fibs, lower lows, and then reading your triggers on how far will it go. Now, if you notice on your 21.3 chart, which I don't ever say to look a lot at it, but notice the triggers are up pretty strong. This is the trend trade short that your 21.3 chart will scare you out of on your 13.2 and 8 range chart. You see the short trade at 54, trend trade short. If you stare at your 21.3 chart, it'll scare you out of that trade. So again, when you're doing 8 range and 13.2 trend trades, don't look at your 21.3 chart, it'll scare you. Now, it may have you take profit a little bit quicker on your short trade, but don't let it scare you out of your short trade. And again, typical S&P fashion, they go back up there and they retest the high again and give another short signal. All of this has happened inside a 121.3 bar. That's why you don't stare at the 21.3 chart when you're doing 13 to 8 range based trend trades. Notice your market flow triggers agreed with all of these sell signals. A really, really important lesson on why you do not let the 21-3 chart scare you. It doesn't have anything to do with 8 range 13-2 trades. Trend trade short at 48.50, 49. Again, that's the one that needs to keep going because we have a blue fib on our 13-2 chart. The triggers are very strong on the market flow chart, which again is super, super, super important for trend direction. And again, when you go back and look at it later, you're going to say, wow, those triggers were strong. Why did I not go short? And if you went short from the top a couple times, you made a lot of money. And then this next trend trade from 48.50 just made you another 5 points. So you can see clearly there's, 5, 6, 7, 8, 9 points at a time on the S&P if you've got the right direction and the right areas. And the same is true with gold, and the same is true with crude oil, Ethereum. If you day trade Bitcoin, it doesn't really matter what market you trade. Euro, US dollar. Any day trading market that you can have a 3-chart combination. A larger chart for areas. And again, if you look at your 21-3 chart now, you'll say, wow, that fib did hold at 54.80 and not one trigger got above it. Combined with the termination conditions on your 13-2 chart, it made for a very good top. Now, termination condition on our 13-2 chart, read the triggers on your market flow chart. That will always tell you if you should take one more trade or not. And if you took one more trade, you can see obviously now you're really happy that you took it. Again, another 4 or 5 points really easy without having to even blink, just by reading the 13-2 and 8 range triggers. I know you're probably tired of hearing that, aren't you? You can't possibly get tired of watching this. Hopefully. It's literally money laying on the ground. You just have to pick it up. But you have to get the areas right, and you have to get your trigger line and Fibonacci area reading right. Trend trade short, probably from your 5-1 chart, but market flow signal as well. Might as well go short down to the next fib and make some more, right? Now, anytime you get within a couple of ticks of a fib, you got to start getting mindful. Well, there's your fib. So if you went short again at 44 area, give or take, that's another 9 points. And if you went short in the middle, maybe from your 5-1 chart at 43.40, it's another 5 points. And again, it looks the same in history as it does live. And look, I've already proven it to you today. You will get run over a couple times. I promise you. It's going to look perfect and you're going to get run over, and it just happens. As long as you continually take the right trades and don't take a point and jump out because you're scared because the market gives more than a point. You're not a scalper with Nexgen. You're trying to trade from one area to the next, and you can see there's another trend trade short at 34 probably, maybe momentum trade. 34 down at 29, 28. Easily with the direction and triggers, right? And fib areas at 34. Hopefully you see that. It's only 12 o'clock noon. This is about the time that the chat room ends. for the day. And usually everybody who has followed the indicators and traded well, you know, this is the type of day where people would be up 20, 30, 40 S&P points. Now, anytime we just barely break a fib and all the triggers are weak, we have to be very cautious. See that white paint bar going up and a high volume line? That's probably the bottom. The triggers aren't quite crossed up yet, but if they were, that would be your long trade. But they're not. You get my point, right? A major fib at the bottom. We're waiting for some triggers to roll up, which they haven't done yet. Now they rolled up in a long signal. It's probably the end of the trend. You can see how clearly the small triggers rolling up told us that we should stop at least taking shorts for now. Probably. I'm not saying go long. The triggers are below the fibs, so we're not going long. The easy shorts are over. Well, unless we break through. Alright, to the next fib. And again, look, we weren't going long because our trigger lines were physically below a fib, but it was probably the end of your trend trade shorts. And again, I say the same exact thing here at 43.24. That's the end of your trend trade shorts for now because you hit fibs and not one trigger is below it. So when you pull back to this high volume area right here, this is basically the last hurrah 43.28 that breaks. And with a white paint bar up, we'll probably make a bottom, and that should be just about it. See how all of our trigger lines are rolling now? There's your high volume line at 30.50. Triggers are going up. It'll pull back to support and your large triggers, and then now we'll see if the trend's over. You see the trend trade going long, right? $43.28. That's the first one. I mean, you know, again, you have to be cautious a little bit about the first one because sometimes that mid band will hold it. But look at the triggers on the 8 range chart. We're going up. We're going up until something changes. Alright. Small triggers are still way above the large triggers going up. So we wouldn't be going short here, right? Hopefully. Alright, a little stop out of the low. They tend to do that and get back to the large triggers. You'll see that in step number 1. Generally, this is where they'll make up their mind. So again, look, first little attempt at longs. Don't get too married to it. Looking at your 13.2 chart, we're not going short, right? Large triggers are up. We're going up. So they came down a little further. Now our large triggers are up on the range chart, and our small triggers are up. They're on the wrong side of each other. But we have a high volume area at 27. If we get an up bar here, that'll probably be the low. Now, it's not the best high volume line trade because the triggers aren't quite right. But they're doing battle right here. And again, look, this is kind of at high speed on replay. So it's easier to, when you're in it, you're like, oh my God, is it going up? Oh, and it takes, you know, what, 10, 20 minutes for something to happen. 30 minutes. So right now they're in a battle between Range triggers going down to retest the lows. Well, I guess the range chart triggers one out again. And breaking the lows. So, you know, there's a big reward for getting the first long, but you do have to be cautious about it. All right, trend trade short. That's what the triggers say. See it? Hopefully very easily. I know it's a little scary to go short, but all the triggers are down. They said short at 24, whether you like it or not. And that was 8 points, and we have more coming, it looks like, based on the triggers. All right, that was 8 points. Sorry, my math was off. 6, now 8. And more than 8 coming. That's what the triggers say. Do we have a fib or something? So it's still short. Let's just stay short until the triggers roll back up. What do you think? Or we hit something? I don't know. Crazy thought. It's been a big day. So we're looking for something to get hit here. Or something to change. You get a yellow-white paint bar. So should keep going down based on the trigger line read. Obviously they're messing around here a little bit. You know, again, this is where a 5-1 chart might be handy too, because if it had the right areas or if it had divergence against you, you'd know to get out. And again, I'm not saying don't use a 5-1 chart. Still down until further notice. There's a high volume line. See how the high volume line and the small triggers rolled up? That's usually the bounce, and we got the bounce. Now this is the edge, right? This is the edge that's either going to hold and make it go down again, or it's all going to be over. And again, look at your small triggers on your market flow chart. You don't have to guess at edge trading. Just don't go short against small triggers going straight up. And you won't be wrong. That's the easy way to think about it. If the small triggers are going straight up and the price is above them, just don't go short. So clearly, they stopped out in the middle of nowhere, which that does happen from time to time. So again, once the conditions changed and the small triggers rolled up and the high volume line held at 43.15, that was it. And we made it back to the real edge on the 21.3 chart. Again, the triggers are wrong for a short on the 21.3 chart. So even though you're at an edge, it's not a tradable edge to go short. So the triggers say up on the 13.2 and the 5.1, or the 8 range, excuse me. So what does that mean? If the triggers are up really strong, we're going up. Like it or not, it's usually not wrong. And again, the farther it goes up, the more obvious it is to you retrospectively. Again, we could see it turning down there at 43.15. And, you know, again, now you're in a situation where should you do a trend trade long? The answer is yes. I know it seems a little bit weird, right, to do a trend trade long from here. And again, this is where waiting for a market flow signal, number one, can help you define the entry, but also help you define your risk. Because it seems, kind of weird to do a trend trade long when resistance holds. But when the triggers are that strong, you usually get a bounce back up, and then you can manage like right here. So this is the do or die spot. If this area breaks, it's going to keep going, and if it holds, it will terminate the trend. A good target for your long, and then as the triggers didn't roll over, see how the triggers haven't rolled over on the range bar chart yet? Now they have. A little bit, small triggers anyway. If you look at your 13-2 chart first, it doesn't say we're going down. It says up. I probably wouldn't take another long trade into resistance. I'd probably, well, there's your market flow short probably. Notice the high volume area line and a signal after the small triggers roll. That's a lot more favorable for a short on the market flow chart. Now, don't get too greedy with that short, right? Because not every trigger line is going in your favor. It's usually not going to go very far. When they're all going down, it's all wonderful and you get big trades. If you take trades like that short up there with the market flow and the high volume line, it's okay to take a smaller first profit target when all the triggers aren't going your way. Now all the market flow triggers are going down still. It's kind of a common theme, isn't it? Whichever way they're going, the market usually follows. Now, that's support on your 13-2 chart at 19. And they don't care about that, do they? That was a good target for number 2. And sell some more, I guess, right? Again, look at that trade way back up there. Only the high volume area after it turned red and the triggers rolled over. That was very nice. Now, trend trade short. Obviously, if it comes back before hitting something. I'm hoping that this, kind of walking you through this has been helpful. I know we're about done with, it's 2 o'clock, 2:15. Again, look, it doesn't matter what time it is. It doesn't matter what market it is. Well, there's pivot stop out on both charts, 21 and 13-2. That usually is a pretty good termination spot. So whenever you have termination on multiple charts at the same time, you have to really pay attention to that spot. Watch the market flow now. Usually if it's a good low, the market flow will go jumping out of there with a lot of bright colors. Stranded sellers in a white paint bar, that'll do it, probably. High volume line, can't really take it because the triggers aren't going the right direction, but if they were, but they're not, so we won't. All right. Anyway, you may or may not do one more short. Again, double pivot stop out there. the trigger lines would have kept us from doing anything. Even if you didn't take a short trade, if you did, great. You know, and again, this is where maybe the 5-1 chart looked perfect for a trend trade short. I don't really know if it did, then the trigger lines definitely said it was okay. If it didn't, then you might not have taken it, which is okay too. All right, so again, we'll just kind of stick with this until it fades out here, but I know this is probably getting monotonous to listen to after an hour and a half of the same thing over and over and over. Hopefully it highlights what I wanted to highlight, which is watching the 8 range triggers between the 13.2 areas and the 8 range areas and triggers. It will tell you when it's still going down, you can see. It'll tell you whether you can take those trades or not, whether it will keep giving you trade short or not. And again, just trusting those trigger lines and strong market conditions to get you to the next area. Stop taking a point and jumping out of your trade. If anything, I wanted this to highlight the obviousness that it's not worth it to trade for a point or to get scared or jump out. You need those bigger trades to help you offset some losers, because you're going to have losers. And, you know, again, there's a couple of spots in here that were perfect looking and they got run over. And you have to be comfortable that not only did you, this thing's really selling off, not only did you do the right trades, but you had the right look, you didn't fight the trigger lines, which is probably the #1 offender for most new users, is that they fight the strength and direction of the trigger lines, or they don't use Fibonacci mid-bands and trigger line areas to time their entries. Okay, that might be it. $42.99. You can see really weak triggers. You can see the trigger lines on the range chart have rolled over. You know, 4,300 is a major number. Obviously, there's not any fibs there because we've gone down so far. We're really kind of outside of a 3x range on a normal day. So there's not really any support areas. The only thing we have is trigger lines here. So watch, we just pulled back to our large trigger lines rolling up on the market flow chart. That should be it. Generally, that's where the mid-band on the 5-1 chart comes in handy to do that trend trade to the long side. If you didn't have that 5-1 mid-band to help you out, you wouldn't have had a trade there unless you just used the large triggers by themselves. Which, you know, again, sometimes that's a little more of a difficult scenario. And again, look, watch your large triggers on the range chart. It'll help, you know, that's why we superimpose them on the 5-1 chart, to help you spot these trades. And again, there's no areas to make it easy to do any long trades here. So again, the only thing I can say is that the triggers are up, and every, you know, divergence low and pivot stop out and stranded sellers is, you know, that's all I see. But again, it's hard to call any long trades when we hit the mid band and there's no support. So I'd like to see some support. And again, if you did long trades, which would be perfectly acceptable in that situation, from 02 up to the mid band. Ever since 2004, we've said it. The mid band is your first target. And now we have the market flow lighting up significantly. We have a pivot stop out at the bottom. So double divergence on the bottom, and that should usually be a low for us. Not only on the 21-3 chart getting weak, but divergence, pivot stop out, and again, that's probably a low. And again, watching the large triggers on the range chart at 03. And again, if you had some type of fibs on some other charts or mid bands on charts, that would be helpful. Again, just watching the 03 area helps fine tune your eyes as to how far could it go, and then obviously what could happen after that, which clearly on all of the triggers on the 13-2 chart as well as the 8 range chart said up and nothing but up. If you guys have questions, let us know. Obviously, please take the time to go through the website, go through the training material. If you have any questions or you need anything, please let us know. We'll be more than happy to help. And make sure you're writing on your charts, annotating charts, posting them in the chat room, and making sure you're defining your areas and your trigger lines when you're taking these trades. Have a great day. We'll talk to you soon.